Hey y'all, how we doing? Today is Wednesday. It's Wednesday, my dudes. No, I'm kidding. It is Wednesday, May 5th. I check every single time and I'd look before every video and still forget. Cool today that my shirt matches the background. I kind of just rotate the colors. That's nice. If you're new here, what's up? I'm Evan. This is Fifth Third Trading. I'm also known as Chef Boyar Swing, John Stonkton, and Bruce Swingstein. Now, I usually would become on, the first thing I'm saying is, hey, White Claw, sponsor your boy. But it's Cinco de Mayo, and I don't think you can make a margarita with a White Claw. Now, is it impossible? No. Improbable? Sure. Impossible? No. So, I've had margaritas today to celebrate. I had some fajitas. I went to a local restaurant, and I got lit with my boys. No, with my fiance. It was a good time. So, no harping on the White Claw today too intensely. But tomorrow, I'm back at it. White Claw, you're in my sights. You're mine. You're my first sponsor. I'll make it happen. Don't you worry, little fella. If you are new and probably confused, one, welcome. Two, great taste clicking this thumbnail. I appreciate that very much. You must have me a man of culture or a lady of culture. You're like, ooh, memes. Delicious. What I'm going to show you today is 8 to 9. 8 looking really good swing trades / day trades for tomorrow, Thursday. Now, the market is melting up, melting down. As it says, stairs up, elevators down. And we took 2 nice weeks of stairs up, and now elevators down. So, is the bleeding done? Who knows? We have no idea. All you can do is plan for good days and bad days, bear, bull, or cash. It's up to you, but I'm here to help you develop your strategy. Whether it's swing trading, day trading. I'm not good at crypto, long-term on finance. But again, I'm going to show you supports, resistances, trend lines, patterns, EMA lines, volume profile, RSI, stochastic, and our vortex indicator. These 9 things combined really develop my system. It's my edge that I created. There's no one else on YouTube who does this. If they are, they're thieves. They should give me back my style. I need it. Give me it now. No. So if you enjoy this kind of content, like, subscribe, hit the bell notification. As always, the Discord's live, the Patreon's live. I have 300 and some odd folks who really enjoy it. I really enjoy it. And again, as always, I appreciate them so much. Thank you so much. And if you want to take a 7-day trial, great, come on through. Check it out. I don't want anyone buying something that's unseen, so I want you guys to come try it week, 2 weeks. You like it, great. If not, great. You want us to have this relationship online where you want to have me screaming about stonks and screaming about how Texas Instruments, I've spent $150 on a calculator. I'm getting my money back. I'm riding this wave until it's done. We're getting our money back. Texas Instruments, again, you and White Claw, you're mine. If you like these kinds of maniacs screaming about stocks, again, like, subscribe, bell notification. No one else does this. Everyone else wears a suit and acts like they're professional all day. You're a liar. All right, I'm a real guy. All right, I rent a cottage. I'm not some billionaire. I have cats. All right, if you want to have a real dude teach you real stuff, this is where it's supposed to be. I have a degree in education. I got Teacher of the Year in 2016. No big deal. So if you enjoy that, great. And last thing to mention is that if you do enjoy this content, I'm sure there's so many other folks out here who are also very, very talented. Go patron them. Go watch their videos. I'm so good at what I do, but I'm also very lacking in crypto, day trades, long term, all those kinds of things I'm not the best at. Fundamentals I'm okay at, right? But what makes me so good is that I know what my weaknesses are and identify them, and I focus my strength while I try and get better at my weaknesses. So if someone's a better day trader than me, fantastic. Go watch them for day trading. But you want to do swing trading, you want to make money on a 3 to 10 day hold, this is it, baby. The guy with the gauge that matched the shirt today, this is it. With that being said, buckle up, buckaroo. Let's get into it. So we can see above me, we have our picks here. Now I have the sectors open really quick, and I want to just check this out real quick. This is what's interesting, is that some days are better than others, and that's the way it's going to be. Energy, I said, was going to be good this week, and as you can see, that support just beautifully. Basic materials, finances, healthcare, and industrials. The 5 I said I wanted to focus. Now, that will be said that I also like discretionary a little bit. It's taken a dive today. It was up. So with real estate, it's so overbought. This kind of makes sense for a pullback. And then utilities also is a very small sector. So when it gets hit hard. But overall, we can see that the ones we want to focus with rotation makes the most sense. Discretionary, you know, it's towards the end of it, and same with technology. These are the next 2 focuses, but again, it does work out where you can kind of rotate sectors and focus the ones that mean the most. and the best deals, and you have some really good success. So again, if you enjoy that kind of content, check out the Saturday videos. You'll find that mightily interesting, I think. So first of our list today is COHU. Great stuff. You're probably thinking, where are the lines? I know you don't think that, right? But I've said this joke every time I've done this, and again, that's show business, baby. Same thing every day. That's the way you come for quality content. So let's do these lines together. First is our support line, obvious. You can put it here. You can put it here, here, here. It doesn't matter. You must do this yourself. I'm only here to show you my own watch list. This is a good support area, BEAU to full. Our first resistance where price action stops will probably be up here. I mean, it could be a little bit lower. Sure, I mean, if I'm a little bit more maverick and a little bit higher, but that's probably a good resistance. All my resistance trend lines and horizontal ones will be orange. Supports are going to be white. Now, I don't have a trend line for this play. It would usually be like this with a channel and it would be gold. That's the usual setup, and again, you'll see them in the next play. But for this one, no trend lines at all. Looking really good horizontal play here. Let's go to our studies real quick and do volume profile. Between this yellow line right here, which I'm going to highlight for you, extend right, extend left. Between this, and you may not be able to see this, but this line right here, between these two spots is 70% of the volume. Again, if you don't know what that means, watch my volume profile video. It's really nice. A big old D here. Big old D. No, if it's a big old capital D shape, that's a great sign for consolidation. Consolidation means a big move should be occurring sooner than later. Also, interesting enough, if you're a bull, you'll buy down here. If you're a bear, you're going to sell up here, right? So that's another good sign with volume profile is that right there. And then our POCs in the middle. This is a very gravitational node or pillar, we want to call it, that will make price action come closer to it or farther away from it. As you get farther away, it will become weaker. And so we have our POC right in the middle of this resistance area. Again, that's not an accident. That's there for a reason. Let's get rid of it and look strictly at price action. The last thing that we're going to put on here is the ticker. So when I take screenshots later, I don't forget because Lord knows I will. So COHU, earnings, lost money, earnings, gained and then lost, earnings, lost money. Every single time it's gone up, it's again gone up eventually. I mean, you know, not really over here, but again, it's gone up and made some money. So I think this is a good overreaction. You don't want to buy into a fundamental play. If COHU has like terrible earnings and done terrible, yeah, I would definitely look to avoid it. But if the fundamentals check out, this support area is super strong. The 10-year chart, all right, it's been lower. Look, it's had good growth. Okay, it went from 850 to 1250 down to 17, now to the 40. So it's had really good growth, but you should know that it can get lower. And without convergence, because all we have is a support play, your stop loss must be tighter and your plan must be tighter. If you don't plan, you're going to fail. Those who fail to plan to fail. Coach B would back me up. He's a coach. He knows what I'm talking about. You either plan or you fail. You choose. This is a great support, great volume profile line. Again, last time we're down here, 20 days of consolidation. From here over, we had about 4 days, and here about 5 or 6 days. So we have some time, or we may have a few days to watch this, but COHU off a support play makes a whole lot of sense to watch list at least and see what it does this week. Let's check the indicators. What's so cool about my channel, besides me and my future sponsor, White Claw, strawberry. Make a margarita with it. Who cares? Live your best life, you know? No, but if you really enjoy raw, you know, indicators, what's really cool is that I do not actually look at these while I am scanning. 100% of the time, EMA lines are turned off, RSI is turned off, stochastics is turned off, and so is Vortex. Everything I'm about to look at is live. That way you can see what I see in real time, and you can kind of see my progression, what I'm looking at. It makes it a lot easier, and also it's pretty cool to see. So off the rip, you may be thinking the EMA lines are above it. You'd be correct. These will be resistances moving forward. So again, your short-term price target, not like 5 years or a year, but your short-term price target must be based below or near these EMA lines. Now again, it has no real problem breaking the 200, right? Even at the 50, you know, it goes through it. Again, but just to be safe, let's say it hits like 36.75, your price target should be kind of near 42.50. Even here, 42.50 is probably going to be where your price target for the short term should be. Also interesting, a horizontal play. Where are the EMA lines? Directly in the middle. Again, that shows consolidation. That's a good sign that we're building up for a big move. RSI is low. Great. Stock is low. You have a small divergence. I wouldn't put too much weight in this, but this down and this up is certainly a bullish divergence happening. And it's already -4 shorting left. So again, the stochastic loves this play. Bulls low, bears high. With the vortex, you can wait for a crossover. See where you would wait for a crossover here. You would have made money, but at the same time, you would have much more risk waiting for that kind of move. Even over here, you cross green, you would have waited, would have made money. But you could also buy at the bottoms and see how that lines up pretty well. So the vortex does that too. Great thing, shows us the bottom, which lines up well with RSI. But also when you do buy and hold and you get a crossover, you know you're good to go. COHU, a great horizontal pickup. Again, I must stress that you use a stop loss into your research, because without convergence, which is the trend line, patterns all lining up, all you have is the support line. It's not the greatest play you can go off of, but again, for a value play, it makes a lot of sense. Next is DAO. Now I call it DAO over here and over here. The good news, if it holds right here. Lower low, higher low, higher low. That's showing some good life. Higher high, higher high. So we have some life. Now it is most definitely lower highs on the macro scale. Let's zoom out again. Again, this ticker, relatively newer, okay, has had a very good time, a very good job holding this area. So this is a good bet, a good buy. Let's say it breaks down 22. Oh, you lost 4%, you get out, you don't trust it, you can buy something else, that's totally fine. But it's a great support play. This is no longer relevant. A great support play. These are our things from our Discord users. You know, your first real resistance is what? 10% away, 6.5. So you know you're betting 3 or 4 to even get 6 and a bad move, that's pretty good. And let's say that this happens over here. Like, see how it was also downtrending like this. It broke above it, retested, and took off. If we can get one of those moves, we could be for the next 2-3 months having a fantastic hold. DAO, a great support play. Again, no convergence, but for a value play with how the market's looking, horizontal plays do make some sense. I like what it's looking like. Let's check the indicators. So the 50 has been a problem. It broke above it, and then it died towards the 200. So again, I think the 50 would not be the best take price target fully. I don't think it's bad, but to get 11%, if it shows some death like this, it kind of comes up and goes, ooh, I don't like that, and it comes down. Take your money off, then buy again at value. But again, your long term, even for the next few weeks, the 200 until you break above that should be where your short term price target's going to be. Anywhere from like 25 and some change to about 27 and some change should be your short term price target. We have our RSI low, that looks good. Stochastic, there's no divergences going on quite yet, they all look pretty good. But again, -40, where you want it, -80 really, that's super low. If we can get a curl north and show some life, that'll be a fantastic, fantastic sign. Bulls, they're low, bears, they're high. DAO for a horizontal play makes a whole lot of sense, but again, there's no trend line, there's no bullish pattern, no convergence. So again, for a horizontal play, I do like it, but again, extra DD and extra strong stop loss need to be applied, in my opinion. Next is EARS. You may be thinking this looks very similar as a horizontal play, but you will notice you have a consistent amount of higher lows across the board. What we're looking at right now is that we have a higher low that's holding. Now it's only 4 or 5 cents, but again, if you have a higher low, that's a great sign. If we can buy in here, let's say it holds, all this looks good. If you were buying here, you're risking about 5 or 6%, which is a lot, but your first resistance is already 5% away. You hit that 1-to-1, it's not a bad ratio. You make a higher high, 25%, which it does often. I mean, it also has these big spikes in it. So EARS, it's cheaper, it's more volatile. There's 0 price targets from professionals right now, but your POC is above it, pulling it higher. You know, you've been up here before. I don't think you're gonna get this high again. I think maybe going for like 370, 360 is a better price target. But EARS has had plenty of upward potential. All the red seems to come when it gets up above the resistance. So again, I don't think a plummeting, you know, to like $2, not the most logical, I don't think. But at the same time, I think a stop loss is necessary, and I think you may see some consolidation happen. It does this for a while. If you can say 275, 276, it'll be a great buy-in. EARS, a great slight uptrend, but I do like the volatility. If we get in the red side of the market and this pushes the right way, it could be fantastic. Let's check the indicators. So we can see the big problems is 200 EMA line. It seems to have a hard problem getting above it, has no problem getting below it. So that's going to be a big problem moving forward. The 50, yeah, a little. So I mean, I think your short-term price target, you know, go for 10%, go for 11, take half if it shows, you know, some stagnation. But overall, if you can get to the 200 from right here, we're talking easily, what, 15%? Yeah, 18%, some change. It's a good play. You'll take that for sure. Under 30, you'll love it. Made money over here, and over here you would have made money off a gigantic spike, but that's kind of probably irrelevant to this point. But anything below 35, you would have printed. That's a good sign. Stochastic was low, and again, it is not a divergence. That makes sense. But negative 40 showing some life. If you can run this whole thing up, could be 15-20% pretty easily. Bulls, they've not been lower in a long time. That's good. Bears have not been higher. EARS, you must do extra due diligence. You must mitigate risk with a play that's 291. The amount of like leverage you can get with a $2.91 play compared to a $200 play when it comes to gains is insane. So again, do not get lost in the sauce. The second you look at dollar signs and not percent, you're messing up. One more time. The second you're looking at the dollar sign you can make and not the percent risked versus percent earned, you're messing up. So again, leverage is good, but risk management is better. Next is a gorgeous triangle, HIMX, HIMX Technologies. Again, a well-known company. We all know about HIMX, obviously. No, but this is a really good looking trend up. Once, twice, 3, 4, 5, 6 times it's survived. It's survived here 6 times. Now look at it. It does hit, come up, come down, hits, comes up, comes down, hits, comes up, comes down. I wouldn't anticipate or plan anything like this, but maybe it comes up and then comes back down. So if you are a bit nervous about having some sign of confirmation, it may run up, wait for that first pullback, then you can enter. It does that historically, but I wouldn't always bet on that happening consistently. This is a really, really good support area, though. You can see a bunch of action stops here, a bunch of action starts in this area. So again, your risk, 4.5%. What am I going to get, Evan? Let's say it makes a move to the trend line. 20%, something slight, a nice little delicious snack there. Your first resistance, not been too strong, and again, if it breaks above this, it's off to the races, looking really good. Great looking triangle. We're going for the consolidation play. Let's see if the EMA lines are in the middle. If they're in the middle, that shows a triangle is truly forming, and I like that a lot. Let's check the indicator. Oh, wait a second. We do have earnings. So again, you may want to wait for that. Again, that could be huge or terrible. Again, I'm not a betting man, so I'd probably wait a day or two. But let's check the indicators. Oh, wouldn't you know? So the 50 and the 200 are in the middle of the triangle. Now again, they could be a little bit higher. But you can see what I'm saying, right? When they get towards the middle of a triangle, it's showing some form of consolidation. You want to wait to get above the 200. That's a fine move, but again, you're 14% reward, maybe 5 or 6% risk. Again, a value play makes more sense with this. A crossover is fine for a lot of plays, but for this, I think the value makes more sense to me. RSI near the bottom, stochastic dummy low. I don't see any divergences, but it is below negative 40. That's really good. Bulls, they're low here. Bears, they're high. Again, minus earnings. And again, I fully encourage you to go do your own due diligence. I always will say this. If HIMX's due diligence and what you find out says this is going to be a big day for them, may be huge, again, that may sway your decision. Fantastic. But with the way earnings have been going, I think really going in hard and putting a lot of money and capital towards an earnings play has not been great as of recently. So again, I'd be careful. But again, if you're bullish, hey man, you're bullish, go for it. But you must do your own diligence and must have your own risk management policy. If you don't have any risk management, don't buy it at all. Next is NARI. Now I called them over here, and they did exactly what I wanted them to do twice. So we're back down here. Now, what I miss about COVID and their sell-off was the amount of delicious, absolute snacks of ascending triangles. I was spoiled. They're my favorite plays, and again, they're hard to find when they come around. Papa likes. This is a really nice, what looks like a possible ascending triangle minus this stupid area right here. You can take this up here minus the top there. This is definitely an ascending triangle. Okay, this is one of my favorite kinds of plays because it's such a clear indication of how economics should be working, right? Has NARI done anything different recently? I couldn't tell you, but Bulls said 77's fair. Bears said, all right, 115. Bulls then said 89. Bears said 115. Bulls then said 95. Bears said 115. 101. 115. 101. 115. It's showing that Bulls are willing to pay more for this. And again, we want to be on the right side of history. We want to get on the, the indexes are going up. NAR is going up. You get a great discount like this. It's a fantastic kind of play. And this is such a great sign of what economics should be, right? Supplies staying the same, but demand's going up. Bears have absolutely no fucking power below 110. They have nothing. Absolutely nothing. It may change, but this is a great sign. It's a really nice buy. A great support. I think this does hold and it goes all the way up here. 14% should be a good guess. Over about a 2-week hold. 14%. Earnings, they run it up. I mean, earnings to it ran up. Earnings over here afterwards ran up huge. So again, you may get some volatility, plan accordingly, but NARI for a play that is an ascending triangle, I do like it a whole lot. Let's check the indicators. So we can see it's riding the 200 beautifully. Bounce, 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 bounce. Now, I said this before, but if you see it hitting the 200 more often than it used to, I'd be a bit concerned, but again, it's hit a bunch of times over here, ascended, hit a bunch of times over here, so I'm not overly concerned. But we can see, breaks 200, comes back, broke it, came back, broke it, came back. You want to wait for a crossover here? That's fine. I give up 2.5% for some sign of life, that's fine. But I think this value is also very evident, so again, it comes down to preference. A crossover play or a value play, it's up to you. NARI, 30.007, that's a great RSI. Stochastic is low. It's also showing a fairly small divergence here and up, and then here and down. So that's a great sign of a bullish divergence. That's beautiful. You want to see that? Excellent right there. Bull is low, bear's high. Again, this is a 10 out of 10 play in my book. I mean, you have all the things you want. Convergence, you have trend, 200 EMA line, support, all coming together. Volume profile can even be part of the convergence play here. You got all the indicators in line. It all looks really good. NARI is a complete and total snack. Chef Boyar Swing is in the house. Delicioso. Next is RPAY. Now, RPAY had a huge ascension, and now it's been going sideways for a very, very long time. It can be difficult to time your entry. I mean, this is a very sporadic movement. If you're a beginner, it may be a bit confusing. We have obvious lower highs across the board. So again, make sure that your risk and your reward are equal. Make sure that you don't go like, all right, I think I'm going to do $25 for my price target. That's not very logical. As for a short-term price target, $23.50 makes some sense. Hit this. Again, find your risk management policy. Is a trailing stop loss, a hard stop loss, take half, let the rest run, whatever it is. Make sure around 23 bucks, if it does run up, you kind of decide what you want to do before you get into it. But this is a great support area. It comes down here often and then reverses quickly. You can see how quick these reverses are. Boom, takes off. Over here, boom, takes off, takes off, takes off. So you may have a day or two of consolidation, but if RPAY is going to go, and it's going to go hard and fast, if it does all that kind of good stuff, I would expect it to be today, tomorrow, the next day. Earnings, you better hope it goes green, because this is a very low volume area. I can probably guarantee you if I were to turn the volume profile. Very low volume here. Okay, what's that mean? That if we get down here, we have two options in a gap like this. We're going to wick and come back, wick, 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 and we come back, or we're going to clear that shit hard, and we're not going to come back. We're either going to come down here and do this, dip our little baby toes in and come back, or we're going to do see a nerd and hit 18 bucks. So again, I don't think that you should be overly concerned, because the main volume's up here. This is a beautiful note. This is absolutely gorgeous, right? But if we do lose the $20 area, we could be in some hurt, so a stop loss must be used with RPAY for sure. And with a descending triangle, again, extra, make sure you have a stop loss. Let's check the indicators. It's a horizontal play where the EMA line's directly in the damn middle. Again, showing consolidation, we're aiming for a big move. There'll be resistances, but again, they're like 9% away, so I'm not overly concerned with that right now. But again, this is a good sign of consolidation. Stocks can consolidate, ascend and descend. We're seeing consolidation. We should hope for ascension or descension soon. The RSI, almost negative 30, love it. Our stochastic is low. I don't see a divergence really at all. These all check out pretty well, but again, negative 40. Trying to get some curling north. It's not showing that yet, but this is a good spot to buy in. Bears, high, bulls, low. RPAY, again, there's no convergence. It's a horizontal play, but for what it's worth, it's a great one at that. I do like it a lot. Next is WCLD, Wisdom Tree Growth Leaders Cloud Computing ETF. Again, it's an ETF. This is not going to follow your traditional rules. There's not going to be due diligence on this. Now, you may want to look in what they're holding. That'll be the due diligence. But it's not going to be something like, there's some news about WCLD. That's not going to happen. It acts differently. But again, I still like to buy things at a value. This is a great value. Now, I don't know what they're holding off the top of my head. I can go research that easily, and you should as well. But this is a great, higher low, higher low, higher low, higher high, higher high, higher high. Trend line looking beautiful, support's beautiful. It's not going to behave the same way as a lot of other stocks do, but this gap wants to be filled. It likes to fill these gaps. Okay, it likes to go through and fill them. And if it keeps moving up, a higher high is 13%, risking 2 or 3. Again, I'm not going to spend too much time on this. It's an ETF. You must see what's in their portfolio. But given the support area and the trend line, I like it a lot. Let's check the indicators. Off the bat, we can see the 200 is going to be the stickler for sure. Until we get above it, hold, retest, and take off, it may be a problem for your long-term price targets. But your short-term ones, again, 7, 8%, you get in, you get out, bing, bang, boom, not too bad. Also, ETFs don't really give a shit about indicators, right? These don't really matter that much. They should be used, they should be seen. But again, I'm not overly convinced or worried about the EMA lines, if I'm being honest with you. RSI under 30, that's fantastic over here. Would have made money eventually. Would have been burned. Would have been burned. Would have been money. So it's a mixed bag. But again, when you get low, the odds are more likely you will be making money. Not perfect, but again, a good sign nonetheless. We're under 40. That's great. We can see, it's not a divergence at all. Nope, that's not a divergence. Looks really good though. Bulls low, bears high. Again, a great setup, great trend line. It is an ETF, so again, your research must be based on what they're holding, what they're doing. It says cloud computing ETF. Boy, I wonder what could be in it. So again, do your research, but again, I like the value nonetheless. It is a good one to watch for sure. Last and certainly not least is this snack, ZI. Valid. This is a good play right here. Sheesh. We have a great trend line. Once, twice, 3, 4, 5, 6 times. Now it broke it. Gee willikers, Robin. So I mean, this does break occasionally. I would not be surprised. All right, this is a bit aggressive. So no one else really fits. You can put it here, but that's not really. That's kind of cheating. But you can put it here and see. Okay, you may have a little baby left. Okay, make him down a little bit farther. But this is still a very nice trend line that's nearing. This is a very strong support. There's a high chance we break down very quickly and come back. Me personally, I will not be purchasing ZI until we break the support and hit this trend line. Now it's earnings. Never great. See how it's coming down? Sheesh. If it does come down to about 40, anything under 45 should be a good deal, risking 3 or 4%. But until then, I'm not overly convinced. What does help me give me confidence long term is this gorgeous ascending, or this horizontal triangle we're forming. This is a great horizontal triangle that's been forming. Even if you goof up this entry, barring any disaster, and I can't predict the future, even if you were to goof up this entry buy now and comes down here, hopefully you'll eventually see 30, 52, or 50, right? Hopefully this triangle keeps going back and forth. If that's the case, a messed up entry can still be profitable if you hold long enough. I never encourage holding a bag. I think averaging down just assumes you were wrong the first time. Sorry if I hurt your feelings. I still love you. But ZI, in a day or two, if it keeps coming down to about 44 bucks, could be a fantastic purchase. Let's check the indicators. Off the bat, where is this triangle? Here and here. EMA lines are where? Dead in the middle. Showing a consolidation, so again, that's a great sign. It's below both, so it'll be resistances, but again, it breaks the 200 and does what? Comes back. Breaks the 200 and comes back. It has a problem breaking it, so again, your short-term price target, 50 bucks, probably the max you're going to want to put. RSI, almost negative 30. No clear divergences yet. Well, you got a small one from here over. See how that's not showing the same thing? Right? Doing one of these is doing a microphone or a megaphone. But we need this price action to hold. If it dips down farther, the divergence breaks. I'm not putting too much weight into it, but it is there. We also have a very low bull, very high bear, a great setup. ZI, I think, needs a day. It's earnings. Give it some time to show some life or to die further. But again, a great pickup nonetheless for Zoom Info Technologies Inc. Com Cla A. Good pickup. So there you guys have it. We have about 8 fantastic plays for tomorrow. Now again, put it in the context of the major markets, right? We're having some violent swings up, some violent swings down. You cannot predict the future. What you can plan and predict is your plan and your reaction. You should always have a written plan with stop loss, loading zone, price target, and a reasonable moonshot for every single play. You should always have a hard stop loss for sure, but most importantly, in these kinds of times, until we have a major reason to think it's a bear market, you'll act as a bull and overly bullish. Now, on green days, which I hope tomorrow is, I'm not a future reader, maybe will be, on green days, when you have some downtime, it's the best time to perfect your bear strategy. The higher up we get on, Dash ES or on SPY, whatever you watch, the higher up that we get, the more important it's going to be for you to have these in mind. So I mean, I can look at this all I want. We were up here before. That's an obvious spot to have a bear mentality. Down here, not as much. In the middle, it's either way. Who knows which way it's going to go, right? But as we keep climbing higher and melting higher, if we do not have mentally have you prepare for a bear day, you're going to have a very hard time. Even day trading, you'll have a very hard time. Do you want to do put options on SPY? Great. You want to do reverse bear ETFs? Great. You want to short a sector like XLE is having a rough day, or XLC would be my short of the week? Fantastic. Or a stock? Fantastic. But making a plan for a bearish day, the day a bearish day happens is so foolish, right? You can predict bull, bear day. You can't tell which way it's going to be before it happens. You can predict and guess. But again, having both plans ready and written and in your head will put you about 10 steps ahead of any other retail trader for sure. So with that being said, 8 great plays for tomorrow. Have a good rest of your Wednesday. We'll see you tomorrow for our last watch list of the week. And then Friday, our recap video of last week's picks and this week's picks. Saturday will be our sector rotation video. With that being said, have a good rest of your Wednesday. We'll see you then. Thanks.